And good morning. It is the 25th of March, 2026, 8 o'clock Central Standard Time. This is Risk Neutral Trading. It's my virtual trading journal. Everything that I'm watching is captured on my video, and my voice over here or narration provides insight as to what I was thinking at that moment. So it alleviates me from having to be doing screen snaps and typing and all those things which are required for a journal. And I believe journaling is very important. So that's how it all works. Excuse me, sneezing going on here. Lots of pollen out today. It's sometime. Got a pretty choppy overnight, but before we get into that, I'll finish up a little bit about the stream. So it is, as I said, my virtual trading journal, completely transparent and fully accountable. I have a commitment to take no trades off of the stream, and that's why the stream is so long. Every day it starts at about 8 o'clock in the morning. Every trading day starts at 8 in the morning until 1500 in the afternoon. The complete cash session. Man, sneeze. Hold on. Excuse me. Now, I'm not licensed to provide, nor do I intend to provide trade or financial advice, but I trade live here on Bookmap, my live, fully funded AMP futures account, funded by me. I narrate in detail as a trade is, I anticipate a trade setting up, and then if I take a trade, it's not only do I narrate it and the trade management, but it's fully graphed and visualized here on Bookmap and IRT. So that's kind of a be sure you understand that this is not, I'm not giving trader financial advice, but I'm allowing anybody to look over my shoulder at what I'm doing. The purpose of that is I hope that it could be helpful to someone as far as, well, that guy's a nut, or I think that's a good idea, or, whatever it is. That's the point, genuinely trying to help. And I wish my nose would stop sneezing and stuff here, excuse me, but this is getting a little crazy. We got about 20 C going on here this morning. And pollen is going crazy, I guess. So let's get on to the, there's a disclaimer in the description here about, the usual disclaimer. And also, I want you to, in the theme of transparency and accountability, notice that I stream the entire monitor, not just the application. So besides just Bookmap here, there's all the programs that I might have open on this machine, and the hours, minutes, and seconds of the computer clock and date. Now, let's get on with it. So the numbers this morning, there is essentially nothing out. Very quiet, and that's a good thing. I use two news sources. One is investing.com, which focuses on traditional, normal economic numbers and calendars and has for years. They also do earnings. You can look into the past. You can look into the future. You can see what earnings reports are going to come out next week, tomorrow, whatever, so that you can prepare for them. That anything that you think may provide a disruption to our auction, because we are today as traders risk managers. Your primary, ultimate goal or job as a trader is to preserve your account, and the way you do that is risk management. Well, if you don't know of a potential risk, you can't mitigate or manage it. So that's why news and reports are important, especially now. Notice that these are both free, by the way. That's why you see all these ads floating around. That's intentional. I think I want to try to make any resource I use available to anyone that comes through the stream. If I can. I can't do anything about Bookmap or IRT. You got to pay for that. But, there you go. Notice that the event title turns into a URL. If you don't know what import price index month over month is, you can click that and find out all about it. Excuse me. The other news source is Financial Juice. Similar idea with a calendar on the left side and a docket, kind of a squawk box affair going on the right. And it is also free, but you can get, I'm sure they would both be really happy if you paid them. The thing that I appreciate about Financial Juice, apart from investing.com, they will pull non-traditional economic events or potential disruptions to the auction. They will pull those into the calendar, like right here at 12 o'clock. Trump receives intel briefing. Well, this is a good thing. I'm not saying anything political, but if unless you've been living under a rock for the past year or so, you will know that there is an extreme potential for this to disrupt the auction. Look what happened on Monday. Trump came out with I think it was a word, I don't think it was a tweet, at 7 in the morning, and the market went 150 points in 5 minutes. That is a disruption to the auction. So I really appreciate that with Financial Juice, and that's why I use it. Also, you can filter it. Also, you can, there's a squawk box over here, so that's how it works. Let's get on to the pre-market. So I use two basic platforms. This is Investor RT, and this is Bookmap. And I have two basic setups here. And they are identical except for the instrument. This is for the micro ES, the micro NQ, micro ES high time frame chart, and the market profile. I track the same exact configuration, but for the minis here. Now, the market profile chart, I don't switch between mini and micro. It's the mini on this one, and it's the mini on this one. And that brings me to something to point out. If you notice on IRT, in the header of all the charts and things that you see here, is the name of that particular chart or quote page, which is meaningless to anybody but me. But the important information is the instrument, the chart type, the periodicity, and the session. You can see that in all. So you can see right over here that this is the ES, 30 minutes, TPO profile, full day, 1700 to 1600. You can see that this is the micro ES, 12 tick Renko, 1 minute base, and full session of 17 to 1600. So there you go. Pretty clear, huh? And pretty cute. Well, what happened? Here's yesterday's RTH session. Now, I want to point out that these look, benign and balanced, and they are, but that's one hell of a range. This is over 100 points right here. In the ES, in the mini ES or the micro ES. This overnight, here's where we opened, here's where we closed, here's where we opened. This is the overnight session. It is essentially 100%, you could say, or 98% long inventory. Balanced, long inventory. And how do I determine that? It's if here's where we opened. If we trade above that, I consider it long inventory. If we trade below that, I consider it short inventory. typically when we have a full session above, long inventory, I would expect some responsive selling on the open of the RTH session upcoming to take profit. If you were long all night and you were in the profit, wouldn't you want to take a little of it off the table? I would guess you would. I would. So there you go. It is a very balanced profile, perfect Gaussian distribution here with taper at both ends, and the POC smack dab in the middle, so that you couldn't you couldn't ask for a much more balanced market in terms of volume. So it's going to be kind of interesting. Now, this is my micro composite chart, which is what I consider the high time frame. It is for the micro ES. And these are daily candlesticks. See the header. These are daily candlesticks. Wherever they overlap, I pull a volume profile around them, and that generates a micro composite VPOC. High and low, and these red and green lines represent high or low volume nodes in this most recent micro composite volume profile. These red and green values push automatically to Bookmap, as do the session prices up here. Excuse me. One thing, let's check quickly here. I see some low volume, it looks to me like. Well, we're at about 82% volume for this time of day and 3.5 points per 1 minute candlestick. So that's, reasonable. That's a tradable market. Now, Bookmap, on the other hand, is right here. This blue line is what I refer to, affectionately all day as Blue Boy. That's just a vertical line from Bookmap, and I put it on the first print of each session. And I do that for a very specific reason. It's a visual heads up for me. If I can see this line when I glance left, I know without question that I have the full session in view. Here's action, here's current trade, and there's the opening print. So this is the full RTA or ETH session, session so far. Pretty volatile, huh? It looks kind of benign, looks pretty choppy, like probably a lot of retail got ground up. But notice the swings here. This is from 35 to 82, so that's 50 handles there. Pretty robust ETH session. Now, right to left columns on Bookmap, the dome, the price ladder, the order book, whatever you want to call it. These are prices, and these are resting liquidity at price. These are market or limit orders, not market orders or traded or trades. These are resting orders, liquidity. This is the micro composite column where I enter the values manually from the micro composite chart. Here's the POC. It's been putting along since the 19th. Excuse me. And here are the high and low volume nodes, which push automatically to Bookmap from IRT. Full session volume profile. This started plotting last night at 1700. And we'll continue through 1600 today. This is not the overnight. This is the Globex or the full session. This is Delta and RTH volume profile and Delta. And it'll reset at 8:30 this morning, fingers crossed. This is my statistics column, which is real important to me. And these are the session prices, which push automatically from Bookmap or to Bookmap from IRT. Notice that I can't stop clearing my throat. So we have notice there's no indicators on my, I try to keep everything, my approach to the market as simple as possible. And you make all the jokes you want, but that's it. Let me make sure I've got the stream trickling down the mountain here. Seems okay. Bunch of drop frames already. That's not good. I guess the internet, yesterday, the internet took a complete dump. So hope that doesn't happen again today. I only look at price levels, volume, and probabilities. So there's a POC for both full session and RTH session. POC, nothing more complicated than the price at which the most contracts have traded so far in the session, period. That's it. So far, we've traded about 6,400 contracts. That's 57. The minute one of these other prices is one contract higher than that, this yellow line is going to move there. That's all there is to it. There's a Globex VWAP and an RTH VWAP, which is volume weighted average price. And there's a mid. There's a RTH mid. Well, there's the RTH POC, and there's the RTH mid. The rest of these levels are just, price, overnight high, previous RTH high, developing value area high, overnight volume point of control, overnight mid. I mean, couldn't be more simple. A couple of prices which seems to puzzle people are the initial balance high and low. I suppose it's because of the naming, which comes from old market profile days. All those levels are, if I can find one for you here. There you go. There's an IB high. All these levels represent are the high and low of the first 1 hour of the RTH trading session. Nothing more. But it is a big statistic that a lot of people watch. That's why I am very aware of it. In fact, that's the first rule of my initial balance trading system. So let's look at statistics, which is a pretty important thing for me. And the first thing you do here is determine the statistical open type expected for the day. It's real simple. There's only two criteria. If we opened right here, right now, how would that price compare to the previous RTH close? Well, I can tell you that the previous RTH close is way down here below us. So it's higher than the close. I think right there. Yeah, right there. And how would this price compare to the previous RTH range? Well, there's the high and the lows down below us. So it's higher in range. So the first thing I do is change the column title to higher in range. And I do that selfishly because when I look at a screen snap or the stream, if I see that title, and I know I've done it every day, I know very well the relationship and the data involved in that open type. Now, the next thing we need to do is clear the statistics from yesterday because we have new ones today. So let's clear the notes. Okay, now I'm going to do a snap that I do every day at about 8:20. I'll do that first and post it, and then I will get back to the statistics. So, cut me some slack. Okay, I didn't open the damn thing. That's not good. Okay, there we go. Now this snap is called the TLab snap. And you will ask yourself, what in the hell does that mean? It is a Bookmap Discord chat room started by a guy named Tom B, who is a guy with 46 years experience trading. professional trader, and I would, by all appearances, very successful. He has a good philosophies or theories about the various aspects of trading which resonate with me. I appreciated the time that I spent in there actively. And so every day at 8:20, I put this snap, which gives any of the folks in there every level they ever dreamed of, whether they have the charting for it or not. And then about 6 in the morning, I post the report. So those are the two interactions I have now with the TLab. Because essentially, Tom suggested, or he says frequently, you need to vet your own trades and narrate your own auction and all those kind of things. So I do this, and this is the auction, and this is how I vet it. Morning, Antonio. Bon dia. And that's what I do. But I don't spend a lot of time in there anymore, in the TLab anymore, because I'm busy watching my auction in my market, if you understand that. And I have to say, in full disclosure, I have no proof that Tom is a professional trader with 46 years experience, or that he even trades. I believe that he does, but I have never seen his account. He doesn't trade live in the TLab, nor does he call trades. So, to be absolutely honest and fully transparent, I have no clue whether that's the truth or not. I believe so, as I said, and, but I want to be accurate as I can. So there we have the TLab snap, and let's get back to the statistics now, which come from this study in IRT, and we've just determined today that the higher in range is the potential open type. IRT will highlight the correct open type, but of course, only after 8:30. So the way this whole system works and statistics work is very simple. It looks backwards at the most recent 1,730 trading days. Of those trading days, we opened higher in range, 525 of them, or 30%. Of the days we opened higher in range, price revisited the overnight volume point of control 80.6% of the time. Overnight volume point of control, 80.6. Boom. That's just as complicated as it gets right there. Now, these are not hard, fast targets or lines in the sand. This is probabilities. Please understand that. And I'm sure that you do. If you don't, look it up, ping me, do whatever it is you need to do. But this is only the probability or the percentage of time that this particular level was revisited in the current RTH session, looking backwards 703 days. And there you go. Now the overnight mid is 74.7. And that is somewhere around here. We saw the overnight mid a minute ago. It's hiding from me again. I hate it when it does that. I think it's right there. No, that's value area high. Okay. God damn it. Right. That's probably settled. No, there we go. I'll be damned. Well, I'm not going to keep chasing it. Overnight high is 74.7. So let's go here. Overnight high is 74.7. Typically, after you've done this a while, you'll realize that it kind of goes overnight volume point of control, overnight mid, overnight high, overnight low, previous high, previous low. That's sort of how the stats pretty much, if you look at these across the board, across all four open types, you'll see that they line up fairly well that same way. There's some shuffling around, of course, but that is kind of how it goes typically. Now, what I wanted to find was overnight high, or the IB high down here, that's 67.8. And I want to do that for a reason. 67.8 IB high. Okay. Always put the initials there on the IB high, because the minute we open, this will jump up to above where our current price is trading. Will no longer be here at this flag will no longer be here, unlike most of the all of the other ones, essentially. So I'll be wondering what the hell was 67.8, and now I'll know. Previous close high, value area high. I'm struggling to find all of these. And here's the overnight low. This is pretty amazing. We're way above 49.1. We're way above yesterday. Or my data is upside down, which is going to piss me off if that's the case. I don't think so. Okay. I'm going to leave it at this for right now. One thing I'll point out about the overnight high, or the value area high, low, or the developing value area high and low. Developing is for the current auction, and the value area high or low are for the previous auction. And that's why I need to readjust the charts in IRT after we open. Previous high, that's always a good one. 58.7. Now, here's a good, this is great. This is a great example of the fact that these are just probabilities and percent, of the likelihood that something will happen. Obviously, if we're going to get to 74.7%, we're sure as hell going to get through 58.7 first, right? How could price not do that? Not lines in the sand, just probabilities. Really important. And we're going to open here and again in a minute. That's previous closes right there. Ooh, and that's 69.7% probability. And, just signs along the highway here, I guess, is the best way to put it. Okay, that's going to do it for me for right now. And we'll see what happens after we open and what goes on from there. So, like I said, I would be expecting some responsive buying, except for the fact that we've already started doing that. You see here? We've already tested lower, and now we're coming back up through to the top again. So we might have balanced this out, this overnight inventory out already. And in this day and age of who the hell knows what's going to come out over the the news wire in the next second, who knows? We're going to open in a couple of seconds here, about a minute. I'll be right back. Keep everything working. Today is school run Wednesday, by the way, so there's that. Where in the hell are we now? Where was I? Oh, I know one thing that would be pretty important to do. I bet you will agree, and that is to be able to trade with Bookmap, assuming that we want to. the way you you must activate the trade control panel with this button right here. Ooh, there we go. We opened and we didn't. Yeah, we reset. Okay, great. And we're open. I'll get on to the how to set this up in a minute. I need to change my charting over here to the RTH session. Now, oop. Huge delay, of course. Yeah, why not? Or lag, I guess I should say. This is important for me to do because it maintains the relationship within the session prices. Specifically the developing value area high and low and the previous, because up until we opened seconds ago, the previous auction was yesterday's RTH. Now that we're open, the previous auction is last night's ETH, the just closed period. Well, we don't want to do that. So I changed these to RTH session only. Now the value area high and low represent yesterday's RTH, and the current value area or developing value area high and low represent this current auction. So there you go. That's my story, and I'm sticking to it there, boys and girls. All right. Well, I got that kind of sort of dialed in as far as the reset. What I've done is bump the reset up some seconds. It's now, according to what this silly thing thinks, it's 07:45, 29:45. But it seems to have reset pretty frequently. The reason I care about that so much and bitch about it every day is the fact that these value area and POCs and stuff happen as a result of the volume profile. So I want to try to make them, as with everything I do here, I want to try to make it as accurate as I possibly can. Another thing I do is try to keep the colors consistent, you know, VWAP and mid, and the IBs are green, and because I'm easily confused. So there you go. These session prices and these flags are driven by the exact same data exported by IRT at the same moment. And by the way, if the session prices would be interesting and you could make use of them, let me know. You know, like, subscribe, let me know in the description. And I'll hook you up with the link. It comes from Google. It's a CSV. You can plop it in your book map or your program of choice and have these levels. I push them live continuously from 1700 on Sunday through 1600 on Friday, a typical week. No problem, free, you know, just let me know. Happy to help. Happy to help. Okay, now we got to do something that's all important here, and that's get this blue boy awaken here. Get up, you lazy dog. So that is the opening print of this RTH session. Now, let me get back to being able to trade with Bookmap. You have to activate the trade control panel with this button. You have to decide or choose a method you will use to trade with the application using your mouse. If you choose chart, the only place is this active data column right here, right there. And if you choose dome, it's both, the dome columns, you choose both, you got them both. Guess what? Next thing that's important to do is make sure if you're using trading statistics and you care, make sure that it's going to the right journal for you that you choose. I use multi-brackets, and this is where what the hell happened here? Why'd that do that, I wonder? Right instrument. Okay. This is where I implement the risk neutral methodology. Get this over here so we can watch price. The smallest risk neutral package you can use is a 2-lot. And there we go. Then you have a stop for the entire package. And this is obviously not the time to be determining what that stop should be. It should have worked that out long ago last night in your homework period. But let's assume that this is correct for you, as it is for me. Once these two values are established, the first take profit, or T1, is automatic. It's for half of the package. That's why I said the package has to be an even number. And it's for the same number of ticks positively as the stop is negative. The minute, the second, the moment that this T1 is achieved in your trade, the trade itself is risk neutral. You cannot do worse than scratch. Unless you're a donut and you move your stop away from entry, then you got a lot bigger things to deal with than that. And here's the runner. And you can do, multiple runners. You can do high volatility, big swings. You can do any which way that you think works. And you've got to pre-test all of this stuff at night or whenever you do your homework. Not now, not during the live market. So there's that. Now, you can also, another tool they have here that is kind of handy is the Execution Pro. You can set this to trailing stops, automatically move break even or wherever you want to go. There's a lot of things you can do with that tool. I'll do manually. So now we have the package selected. I have all of these trade parameters available up here at the top of my screen. You can turn these on or off. They don't have to be here at all if you don't want them to be. I do. And I know that it's the right package size, so I don't need any more of the trade control panel tools anymore. So I can click this button again. It stays green because we've selected both as a trading way to enter with the mouse. And I get cancel and close and all the metrics, and I get my screen real estate back. So that's how you set up trading on Bookmap. And what are we doing here? Well, we're having an issue on IRT like normal. And so much for my responsive selling, huh? Away we go. Heidi ho. And in this market, I'm not surprised at all what's going on, to be honest with you. It's completely irrational exuberance based on nothing, like yesterday, or Monday. The market goes 150 points on a 5-minute candle based on absolute, complete, pure bullshit. Sorry for my French, but, no more having talks with Iran and get a big solution than fly to the frickin' moon. But the market was desperate. In my opinion, our traders were desperate for something. Even if they know it's quote unquote fake news. I don't get it, but there you are. I hope that my description of trading panel and all that was captured. Hey, Anton, morning. A donut about that. Sorry. I've got to make sure the girls up here stand by. I'll point out a couple things quickly about this trade control panel in case I did screw that up. You select a method that you will use to enter trades with your mouse and Bookmap. If you choose chart, That's just this active column. Notice how the mouse is a dollar sign and over here it's an arrow. This is one dangerous place. If you accidentally click in here for any reason, when that's been activated, you got a trade on or an order in that you didn't plan on. And you can do that easily by, I've done it, obviously this is the voice of experience talking. I've done it many times trying to move this prices and get my, look somewhere and get my mouse just over here. You need to be real careful with that. The dome columns, I'm, never going to make a mistake clicking over here by accident, I don't think. Now, the reason I'm trying to use both and switching from the keyboard hotkeys is I believe it's more accurate and faster to place a trade at a specific location with the mouse here in this column. But having said both of those things, what I'm going to do now is select off, because this is school run Friday or Wednesday, and I don't want, my favorite cat, Lucky, to come smoking through here, or Panda, and decide they're going to do some trading for me while I'm gone. Because I have my keyboard activated, and you can do that through settings, keyboard shortcuts, instrument trading, and this is how I have the keyboard set up. The only thing that needs to be explained here, or remind you, if you're using your keyboard as with any application or OS system, you've got to have the focus of the computer, of the machine on the application. If I've clicked over here on IRT someplace and I look over at Bookmap and want to enter something with my keyboard, a quick trade, not going to happen, because the focus of the computer is on IRT. So you need to have clicked in here somewhere to have the computer focus back on this. Then, of course, you can't get any faster than the keyboard, but it is not precise. It's I can lift the offer, I can hit the bid, I can go market, I can go limit, but it's wherever price is trading. If I want to put a limit order down here, the only way to do it is with the mouse. I can do it on I can do it on the dome columns, or I can do it in this active column. So there you go. Pretty looked like a rather benign overnight, but like I said before, it's about 50 or 60 handles swinging back and forth, so that's not exactly benign in my opinion. Something's got to come right, though. I've got to get this worked out and get some trading going every day and get profitable, because this is my trading business, which I'm relying on. I'm fat and I want to stay that way. I don't want to go on a forced diet here. Let's see what's happening in, well, we've already got or do we? Let's just check something here. Turn that off. Okay, we have a trigger. The way these breakouts work, we have a trigger, and both of them would have been stopped out right now. So that's what that opening range trade thing will do for you. I'll be right back now. Shit, you're right. I am muted. God damn it. Sorry about that. That was a long soliloquy. That was the most important trading information I've ever shared. That was the gold. That was the, what do you call it? The secret sauce. Yeah. I was just talking about the rearview mirror and how this would be a normal, if you look at it right now, there's a high, come back up there, don't take it. So you put a trade on, and that's an asymmetrical trade. And it is. So is that. Both of which would have stopped out until you got here. And then you're a rock star up here. I don't know how to do it. Believe me, wish I did. That's the frustrating part to me about all these rearview mirror guys that are convincing to a lot of people. Yeah, holy grail. That's what I was looking for when I was muted. Sorry you guys missed that. Yeah, I just missed that mute button. Jesus Christ. Getting old isn't a pretty picture, but it beats the hell out of the alternative. I'll tell you that. I think so far, anyway. I guess as long as all your stuff works. Okay, in another couple of minutes here, I'm gonna have to drop off and saddle up and make sure the girl is organized and running. So here's the initial balance stuff. We'll start plotting through. The lines and levels will pull through the book map. Here was the here was the stopped out. Now here we go. Here's round 2, right? So here's the trigger. I'm sorry. Here is the signal, and here's the trigger for a short. Depending on how many times you want to keep that trade in reference. I have it set in the system here to only take one trade a day because I just did that. Where this is really deceptional is, well, what have we got for? We've got an actual opening range of 17.5 points. So your risk is substantially more than my typical risk tolerance, 2-lot, risk neutral idea. That's real important to understand before you swallow the bait on these various systems that you see floating around the internet or wherever else, is risk tolerance, because you can bet you're never going to see any one of these wizards trade this stuff live. And so, yeah, I don't know what to say. Anyway, now here's another one. Okay, is this our low? Is this the IB low now? And we're going to turn around and go way back up? Let's check. And maybe it's a simple case of just throw it out there. And if you get stopped out, you get stopped out. But as I pointed out over here, okay, there you go. There's the test. Now you would have been scaled. So this part's okay. You would have been scaled risk neutral. But I don't know. Yeah, I know I sound stupid. And that's exactly how it feels. All right, I'm going to fire up the music and I'm going to get on my bus driver hat here. And what's going on? Okay, there's no confirmed. These guys are upside down and back and forth and all over the place, which is what a surprise. Yeah, what a surprise. All right. Trade safe, boys. I'll be back. I can only monitor this in the car. I can't type or do anything. So there you go. Just get, any amount of money that's mine, just slap it over on my account there. You'll know how to do that. All right, what have I done? Is everything right? Yeah, okay, we're still falling out the bottom. There's, so what have we done here? We've picked off the overnight POC, the overnight close, and the overnight low. Well, isn't it cute? And the previous RTH high and the ETH high. Holy, I guess we got them. I guess we got them all. We can retire, huh? Wow. That's pretty amazing. Hey, Lucky. That is amazing, actually. Let's see whether this thing's done something. This would have been quite the trade. You know, woulda, shoulda, coulda, of course. At hindsight, some really clear stuff, isn't it? All right. There's no news on the horizon. It was a really light day, but of course, God knows what's going on with the geopolitical story and the clown car. There is a news briefing or an intelligence briefing supposedly at, I'm going to get rid of this TLab chart because it sucks up a lot of bandwidth. I don't think I need that for anything anymore. Whoop, wrong button. There you go. Okay, we're on the day session. That's all pretty cool. Doop-de-doop-de-doop. I guess everything's all right. We're plotting over here on the on both the mini and the micro. And bookmap. Okay, I'm off to the school, boys. See y'all in a bit.
slow computer.
Well, that's some pretty bouncy stuff we're having here now. I was on the phone with my son. Sorry about that. Take care, Anton. Trying to get everything back to normal after that big drama there. Working out real good for him, though. It's the good part. Yeah, what craziness with this? Who said what? You know, what happened over here? I'm at the point now where every time I see any kind of a movement, I immediately grab the news. God, yeah. Wow. What happened? Something happened. Iran is going to respond tonight. Oh, Iran's nuclear power plant has been struck again. What in Christ's name do they think they're going to do? What do they think they're going to accomplish? I don't really get it. It's just, you know, Netanyahu is a war-crazed maniac and has been wanting to attack Iran for 40 years. Look it up. And I guess this is the first U.S. president he's been able to cajole into going along with him, is the way I see it. I don't know if you got a different opinion or whatever. Speak up, but it's pretty weird. So craziness abounds. We are in essentially a down market with these radical V reversal kind of ideas here. I don't know what you would make of that. What to make of that, I should say. Wow. What are the systems doing? The initial balance system is just flailing around here, taking no trades so far. Now that I've said that, let me make sure it's able to. Yep, there we go. Okay. The opening range trade took a stop there. Would have been a nice continuation trade down here and of course over here, and I think that's only a one trade a day kind of a setup. I can't imagine taking opening range trades throughout the day. I don't know that it has any significance after that. Yeah, as I understand it, the opening range trade is pretty much or the opening range itself is pretty much overnight business being done, right? As I get it. So that opening range after about the first, 15 or 20 minutes, I don't think it's really pertinent anymore. Maybe it is, I don't know. That needs to be back tested and figured out. The initial balance trade is here, and there is nothing. Oh, ironically, this didn't signal an A, or the first rule of the trade, because of the the bar sequence. Of course, there's the open, there's the close, there's the IB, definitely, definitely penetrated. But my rules require the previous bar have the same context configuration. In other words, this open should have been up higher. If the open would have been higher than the close, this would have been an A signal. And then who knows what. This is not really a valid bar, and because, you know, price action, because it's so dramatic, in my opinion. I hope you all are doing well. Thanks for stopping by the stream. This is my virtual trading journal. I'm Monday and Wednesday. I'm on school run from 9 o'clock for about an hour, depends on traffic. Hour and, you know, hour to hour and 15, 20 minutes. This market is so freaking crazy. It's like, really, you know, it's, my recommendation is that you realize your initial basic prime motivation for being a trader today is risk management, to be a risk manager. Your goal is to preserve your account first and then to grow your account. And you can only do that through risk management. I think if you're trading discretionarily, you're on the ragged edge of gambling, and that only vetted trades are, you know, qualified to trade. Now, I could be out there like Pluto, but, and remember that this is my virtual trading journal. It is completely transparent, fully accountable. When I take a trade live on Bookmap, it is a live trade funded with my own money through AMP Futures. Also, this is the approach I am following now. And this is by no means my way or the highway, implied or intended. I really definitely appreciate feedback and suggestions. And, you know, if somebody jumps in the chat and goes, hey, dummy, try this. It works for me every day, or, you know, twice a week or something like that, I'll be tickled to death to have that knowledge. Absolutely. My goal is to have a consistently profitable trading business to support myself and my family. That's the idea. Not to be a, you know, I'm not interested in being a, having a wrap Ferrari and a, you know, a bunch of other, all that typical ego stupidness that you see all over everywhere. What are we doing? So here we have a consolidation or a bar around this fractal right here, this going on here. Phone's lighting up and flashing around and doing all kinds of stuff. So here's a breakout. Are we going to have a breakout and then a retest and then continue? In my opinion, my typical approach is to always trade in alignment with context. That's why I have Blue Boy over here, which is just a vertical line. that I slap on the first print of every session so that I can glance left. And if I see Blue Boy, I know I have the entire session in view. And, here's active price and there's the Blue Boy. There's no question in my mind that this is the entire session context so far. My typical reaction is to never trade against context. Here we have a consolidation. Do we have a breakout and a retest? Breakout and retest? Yeah, we do. Now, the big problem for me at this point is the fact that I'm not making a lot of money trading now. Yeah, well, that's a problem too, but this is the POC. So I'm a firm believer in thou shalt not diddle in the middle, right? That is like the 12th commandment or something, I'm pretty sure. There we are. And that is, by every definition known to man, that is the definition of the middle right there. So for me to take a short off the POC or any kind of a trade either way, think about it this way. The POC, if you miss the pre-market, is the most traded price so far in the session. So far, 7,640 now, it just jumped up. 7,740 contracts have just traded at 66.42 half. What does that mean? Well, that's the most accepted price. And because of that, what happens on either side of it? Up and down and up and down. Test up, come back. Test down, come back. The very split second that one of these other prices trades 7,808 contracts, which is now would be one contract higher than the POC, this POC is going to move there. That's how this works. It's not rocket science. It's just common sense and math. So, the incoming possibilities, the closest contender would be right here at 6,100 at the 40 level. As far as, well, no, I shouldn't say that. The closest contender is 7,000 up here as we're trading 78s, but you see the point. You get the point. So here we've had a breakout and a retest, a breakout and a retest, and what's happening? Had I not been so vigilant about diddling in the middling, short right there, and scratch right here, or, risk neutral right there. I just don't think I don't think that trade is not enough risk or not enough meat on the bone. The risk to reward potential there is not good, I don't think. And that's just me thinking so. I've thought some pretty crazy things in my life, so I want to throw that out there first. And it's 11 o'clock already. These Mondays and Wendy's do kind of screw things up. Primarily because my preference for trading time is RTH1, which is that first division in the day, the morning hours. How are we doing on lags over here? Well, that's okay, I guess. On. Make sure I've got everything plotting and printing normally. Whoa, the volume fell off the map, fell off the charts. We're down at 66% volume. Average volume for 20-day look back, and a 4.25 point average true range on a 1 minute bar. unless there's some goofiness like Monday. Notice that when the volume gets low, the ATR goes up because it's real simple for someone to, wouldn't want to use the term manipulate, but, shove the market around however they see fit and do so with some, it's real easy. Liquidity and how these markets move are real simple. First of all, I guess we'll start at the beginning. The futures market is a zero-sum game. It's virtually impossible to have more sellers than buyers or vice versa. Execute trades, because think about it. We trade contracts. A contract is between a buyer and a seller. So for every trade executed, one person thinks it's going down and one person thinks it's going up. One counterparty thinks it's going up. Engineered liquidity happens when a higher time frame trader gets a big order. Now, look at this. There's 20, 50, 60, 70. So let's just round them off. There's 50, 100, 150, 200. Okay. 300. Well, if a seller comes across the inside market and throws an order on of 300, they're going to clear prices out from 38.75 down to 36.35. Boom. Liquidity vacuum. Manufactured liquidity, engineered liquidity, pick a word. That's how it happens. That's what happens. And that's the only way the price goes down, is for a seller to cross the inside market and hit the bid. The only way price goes up is for an aggressive buyer to cross the inside market and lift the ask. Because there's always a buyer and a seller. There's no such thing as an imbalance. And that's how the market, that's how we have this crap. There's 370 contracts. Right there, boom. That's exactly what happened. Somebody threw an order on. I mean, look at it. If you threw 1,000 lot on here, you're going to clean the prices down to the 66.22 area. Look at this. Think about that. Now, they don't typically do that because they want to try to get somewhere around the ATR or the VWAP. They want to get the best price they can for their orders. But yeah, that's the reality of trading. That's the reality of trading. I think I was on the wrong screen. That's what I'm talking about. You throw an order in here of 400 contracts, and you've cleaned out every order, every resting bid down to the 32s. That's 8 handles. Well, 40 to 30 to 22. That's 20 handles. So that's why these kind of things happen. As I understand it. And this consolidation just continues to build, or this bar right here continues to build. What's it going to do? Well, they've got VPOC right in the middle of it. And I'm going to be doing the thing I've been doing more of lately than I care to admit to, which is watching. This is just crazy. Pretty crazy all the way around. Yeah.
Slow computer.
Well, so much for my breakout and retest in the direct context theory. I can't get it. I don't know what to do. Here we are back at the beginning, huh? What in the hell was that all about? These kinds of maneuvers here, you know. Yeah. I don't know what to say. Well, I do know what to say. The one thing I will say very definitely, manage your risk. Don't be trading without brackets. Absolutely. Imagine if you're long here and you think you're pretty clever and you don't have any stops. And then you're out of business. I would also say that if you don't have a vetted trade, meaning you have captured the statistically significant data set of a particular setup and criteria, and determined mathematically that it has a positive edge or expectancy or probability or whatever name you want to put on that, then that's the trades you should be looking at. If you don't have those, haven't accomplished those things, I don't see how trading with pure discretion differs at all from gambling in this environment. And I don't want to be a gambler. And if you are a gunslinger or a discretionary trader or a YOLO player or whatever, you know, however you want to approach it, and you're consistently profitable, good for you. Don't trade what you're doing. Change what you're doing at all. I mean, I'm envious. I am only envious. No, not only envious, but you know, you get the point. So what have we got? Well, Trump is going to be receiving an intel briefing at 12 o'clock. These are the things I was talking about that I really appreciate in financial juice, which you do not find in investing.com. Is stuff like this. And I'm really glad he's getting intelligent briefings. It's got nothing to do with politics. But I also recognize that this is an opportunity that something random could be said, which could have a real impact on our auction. So that is a potential risk, and I mitigate that risk by not having my account exposed to market risk at these times. That's just, I don't know how to say it other than, common sense. I don't know. Anyway, any other, some polite euphemism to say about, don't be stupid. And again, I want to stress, I have nothing I say in this stream ever is political, and you don't know who I vote for or if I vote, and vice versa, and it doesn't matter. We're traders, and but what does matter is to recognize potential risk. If the I can't think of an example that would be random, but you understand my point. Right now, it should be really clear to anybody that's got a pulse that there's a huge potential risk to our market, our auction, when Trump or Vicente or any geopolitical happening, whether it actually happens or not, which is the part that's pretty surprising to me, and I think unusual in this environment, is things can, a simple saying or a simple tweet on Truth Social, that's Trump's, I think that's Trump's private thing, can have a huge impact on the market and not be based on anything to do with fact. I'm very definitely about, 2 months ago, on a Friday morning at 10 o'clock, Trump tweeted that China had done something terrible and he was going to put 150% tariff on it, on China, and the market sold off 229 handles. Boom. Didn't take any prisoners, no hostages, just straight down. Turns out China hadn't done that. Trump didn't react as he said he would. So it was a nothing burger, completely, on a social media post. But it impacted our market, and if you were in a position and not protected with stops or targets, you could have lost your business and your account and, your hopes and dreams, which is weird. Really weird. But that's the environment we're in. Is it a coincidence that on Monday, 15 minutes, somewhere between 11 and 15 minutes before the announcement of the Iran war being over, or whatever he said, which of course turned out to be completely not true. Positive talks turned out to be completely not true, because there have been no talks. But coincidence or not, there was $1.5 billion worth of ES contracts purchased 15 minutes before that announcement, and 500 million or something like that worth of oil futures, CL, sold 10 to 15 minutes before that announcement. Coincidence? I'm guessing not. We'll probably never get to the bottom of it, because the Department of Justice and the SEC and those people would be the authority that would look into that kind of thing, and I would imagine they will not. So it's, welcome to the stream. This is my virtual trading journal again. What I'm watching is captured on my video, and my narration here provides insight as to what I'm thinking at the time when I'm trading or when I'm watching the market or whatever. I really appreciate you dropping by. Like, subscribe. If you would like access to these session prices, I push them from $1,700 on Sunday continuously through $1,600 on Friday. Happy to share them free, no problem. It's a link that comes from Google, safe and sound. I suppose Google's safe as far as, viruses and stuff. I push the data up to the Google and then provide a link where you can download it from there. So I'm guessing I haven't heard from anybody that there's any problem. You can drop that link into the Cloud Note column or to this indicator or your program of choice, but it's a CSV file, so happy to share that. Just drop something, like, subscribe, and drop something in the chat. Well, we're approaching the witching hour here. Now I will take that opportunity to go eat my own dog food and rest my eyes and get some fresh air and manage my risk, because there will very definitely be some sort of a dialogue and perhaps questions or whatever at the top of the hour. Just what we need. Here's a guard. What is she saying? Today's Wednesday, remember. We've had crude Cushing out, so that's been done. What's going on with that? That's pretty funny. The Democrats flipped the Florida State House in the Mar-a-Lago district. That's pretty interesting. I thought this one was interesting too. Saudi Crown Prince urges Trump to escalate Iran war and deploy ground troops. That's pretty interesting. I'm not sure why. This is ground news, which is the only, this is ground news, which I have to pay for, unfortunately, so I don't often talk about it, but it is the only news that I watch, really, because it gives you a complete breakdown of who reported it, what their typical history of reporting is, how many people did that, 8 sources left, 38% left coverage, that kind of thing. I think it's about the only way you can get, the only way I feel like it's somewhat transparent and basically real news, not spin or I don't even know what you call it. Things that we have now that some of the sources that call themselves news outlets, but it's like a publicity, and it's like an advertising company or publicity company. It's crazy, in my opinion. This world is just going crazy in a handbasket. Okay, I am going to take this advantage to follow in Brother Anton's footsteps here and step away for a bit. I will keep this here. This is Blue Boy, so this lets you know that if you can see this and see the active data column, you know that you're watching the entire context of this RTH session. This is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. This is the RTH volume profile in Delta, which reset this morning at 8:30. The statistics have all been cleared out. All the statistics that I recognize and entered here have been achieved today for the session prices. No trades on the IB system. One trade and a stop on the opening range thingy here, which is just in the initial stages of vetting, you know, defining the way I think the rules should be and that kind of thing. So my advice is keep your powder dry and, you know, unplug your mouse or whatever it is you need to do. You'll notice that I have the trade control panel off on Bookmap. I couldn't trade if I wanted to until I activated all of this, which I go over every morning in the pre-market, but that's on purpose so there's no possibility of a fat finger error or that, you know, Panda or Lucky Mosey and past the key jumping up on the desk here, and they like to get up on these are standing desks and happens to be one of them the window height. They kind of like to get up here now and then and lay around. Say hi, you know. Mosey over the keyboard, one of the keyboards, and trade. So I'll be back in a flash or so. Again, be careful. It's a high-risk environment here. I would imagine that there will be, quite soon, there will be a bunch of press stuff or, you know, comments or whatever else. So I would say be extremely cautious about that. Wow, more of the same. Guess I should have kept walking. Wow. It's kind of pathetic when you have to say the best thing you could do is step away. It's the best technique for trading this market. Look at this mess. Wow. All I'm saying is that obviously there was a press briefing in addition to this, whatever this Intel briefing here. And all of this happened apparently and is perhaps still going on, at least, but not picked up at all in the scheduling over here, which is really disappointing because main reason as I said before, the main reason I leaned on financial juice a lot was that they pulled these random things like press conferences and potential disruptions to our auction into their schedule here, and investing.com does not. Well, that's pretty disappointing. Among everything else that's going on, that's disappointing. I don't know what to say. I'm not going to get involved in this mess. Now, these are 20-point swings, but they're coming through virtually all of the levels. That's absolutely not something. Oh, look at this little cute stuff they're doing here. Look at this thing, and now they're going to do this. And there's just going to be a reversal back. Oh no, it's going to sell off. Oh.
Slow computer.
My wife just made another fresh batch of dehydrated mango. Yeah, I don't know what to say, you know. If you think it's boring on your side of the fence, this is my trading journal, right? I'm not doing any trading here. And that means not making any money, and that means all that stuff. And I'm not sure what to do about it. I'm not going to take trades because I think I need to. If I knew some way to, you know, I was talking about earlier this morning, if I knew some magical way to enter these levels asymmetrically first and foremost and take out some small trades, I'd do it, but I got no idea how. Typically, these kind of deep V reversals are, you can lean on them, but you got to be fast. And the problem I have with something like this, for example, let me close it down a little bit. Jesus. Say I want to get in this. I want to try to keep the scale somewhat reasonable. So that's 2.5 points per price level. So this little spike down here was, let's say it started here. So it was 56 to 16. That's 40 handles and back up. But you got to be really fast and with conviction, because is this going to be the bottom or is it going to do it again? And that's what I was trying to point out this morning early about, you know, how easy it is to look back in the rearview mirror and say what appears to be so obvious. And if you say it with conviction, a lot of inexperienced traders will believe it. That's why I always try to preface when I say things like this. These rearview mirror excursions, it's just crap, you know, don't believe anybody. So you knew right away, here, let's pretend that the market's just opening now. So there's 1 point. That would be typically how I'd be running this. Okay, quite obviously, here's the market open. If you took this asymmetric trade location up here at the top, short, as just a swing high, well, wouldn't that be a lovely short? Well, that'd be a deal maker, wouldn't it? And you could say, well, the rearview mirror guy could say, well, you know, we spiked up here and then we came back down and we retested up but couldn't reach the highs again, and so I knew it was short, and down we went. Sounds real plausible. It's really easy to do in the rearview mirror. Now let's look at the hard right edge. There we go. There we are. Okay, now we go short here. And I should turn off the POC because you can see it moving. That's a giveaway. Is this where you go short? Is this the high? Is this the swing high of the day, of the morning? Well, if you took that, you would have been scaled. So safe at least. Now here we go again. Okay, so they tested the high again. No, not quite. Here we are. Okay, this is it. Oh, no, wait, that wasn't it. Here we go. There's the high and there's the test. And yeah. Okay, you're right. But tell me there's a difference, that you see a difference here from here. Yes, I hope you see the point. For sake of, you know, explanation here in the stream, that's so easy for these guys to sound like they're clairvoyant wizards in the rearview mirror. Now what is this noise? So here we were looking at the V reversal a minute ago. This one here, for example. And what happened here? Is this one? Is this a V reversal? Is this one? Is this, you know, here we go. Is this a V reversal like that one? How about there? Is that one? How about there? Well, we don't know, do we? This is suspect because we've now just taken out the initial balance low. Oh, that means probably we have something going on over here. Yeah, there's an A. We did get an A signal and then a mean reversion low over here. This should be a B because it's gone into the pullback. There you go. Now, if it goes back to the trigger zone, that would be a long. I can promise you I'm not going to take that in this environment. For some reason, the B signal went away. And it did take a long, and now it's, you know, yeah, working out. And I suppose this is an area where I could have taken a asymmetric trade location in accordance with my signal and gone long, and that's not in any way a correct trade over there. But if you went long down here, you're scaled and hoping for the best. What has happened on this bar incorrectly? These signals are, my intention is to have, let me start over. This chart, these lines, these levels, these signals are markers to confirm to me visually that things are happening as I expect them to be happening in the trade system. These are not triggering something, right, in the trading. But what we have here is, so what this is a correctly signals an A, but the downside A didn't show up for whatever reason. We had the B, and then the trigger also happened on the same bar, which is wrong. And it went long. And there's T1. Now at T1, we should be, I don't remember if I have it set to scale or not. Well, this is a pretty good time to talk about this as any. This is typically when I do the backtesting discussion anyway. So let me start by saying, the way I approach the market, or the way I believe to approach the market correctly, from a point of view of probabilities, is that we are in a random environment. The outcome of the next trade is 50-50. It's basically a coin flip, right? What's it going to do here? It's going to go up or down. It's 50-50, whether you like it or not. And so the only way I see to approach the market is to follow in the footsteps of the best traders that have ever traded, you know, the best hedge fund managers and people with the best track record, like Jim Simmons, Tom Sosnoff, Tom the Trader, and Thorpe, those guys. And they approach the market from a point of view of probabilities. They define a setup which has a specific parameters to enter, and then they and that it occurs regularly, and they backtest or identify away from the live market over a large statistically significant sample set that particular setup has a positive edge or not. And that's the process of vetting a setup or a trade. And it's the only process that vets a setup or a trade. So anybody that says, oh, this is a vetted trade or a structured setup or whatever else, ask them to see the data over what sample size. Because if you do a back test over 10, for example, you've got to be outside the possibility of random distribution. And what does that mean? Okay, everybody, I think, that ever hears this stream will recognize and agree that a coin, let's just assume that it's a fair coin, that a coin is a 50-50 probability. Flip a coin 10 times. I don't think there's anybody, except maybe a child, that would be surprised that there was more heads than tails or tails than heads, because that's random distribution. In order for the probability to bear out or to come to fruition, you need to flip it a statistically significant number of times to get away from the possibility of random distribution. So, once you've done all that, you have a vetted setup. And if you determine that the probability or the expectancy is enough for your world, then your job as a trader is to take that trade, that setup, every time it produces itself in the live market, and lean on the law of large numbers to manifest the edge to your bank account, trading account. And that, by the way, is the exact business model of a casino. That's why you hear, nowadays, or sometimes you'll see somebody make a comment, be the house or whatever. That's what they're talking about. A casino doesn't gamble. They have a business of probabilities. They play no game on the casino floor which they have not previously identified to have a specific edge or probability or expectancy or whatever you want to call it, with very specific rules, obviously. Because you can't have the rules change all over the place, nor can we with a trade. If your trade says, well, when it takes out the IB low or the IB thing, and then the second one has got to be close above, and say B has got to close above, and the trigger's got to be within these two. That's the way it's got to be. It can't be down here. It can't be up there. It can't be almost there. The rules have to be specific. Otherwise, those instances don't fit in your specific statistical data set, your subset. So, a casino very definitely does that. They very definitely make sure there's specific rules. And then when they put the game on the casino floor, their only job and mission in life is to play the game as many times as they can in 24 hours. Because that's leaning on the law of large numbers. They know very well, mathematically, statistically, that edge, that percentage of edge over a large sample size will manifest to their side of the ledger. Simple. That's why there's no emotion on a casino floor. Dealers don't give a shit whether you win or lose. It's just the same. There's no emotion there because they're only playing probabilities. They know there's going to be winners. They know there's going to be losers. I mean, sure, they're looking for cheaters and doing all that stuff. But the bottom line is that's exactly how it works. So what I've done then, the way I feel like you have to approach it is to do exactly that. And this is still trading now. It hasn't stopped out yet. So I would still be feeling like a trading god had I got in that. Sort of sorry that I was standing here and didn't actually, but it didn't, over here, it didn't satisfy the rules. And I've got to review what's going on this side of the fence because it doesn't look like it satisfied the rules to me over here either. So anyway, that's another story. But what I have done then is to determine that these are the rules, the specific rules for the initial balance trades. And the computer evaluates every one of them over every one of these bars. And that's basically it. Now, the way you backtest this whole idea, this is where we're testing because this is happening live right now. Again, not within the simulated environment of IRT because I'm not shoving it over to AMP because I'm not confident enough in my ability to have coded this properly. And I'm not going to put my account at risk in that way. So this is the forward look, and the back testing to determine whether that has an edge or not is done by looking back and without discretion taking every signal and trade that is accurately called for by the rules. And then, however many days back you look at compounding that thing. I'm standing here watching this going, boy, I wish I'd have been less talking and more trading. This is pretty slick so far. There's coming up here to T2 right now. Pretty close. And we're getting real close over here. This would be T2. It's if you got in here, that's 12 ticks, or 12 points, sorry. But this doesn't qualify, and I'll explain to you why, actually, here in the course of the back testing. The rules say that we take the statistic with a certain configuration of bars in the same direction. In other words, there's a down bar, opens higher than the close. This one was a down bar, open higher than the close. That's good. That's correct. What I'm not seeing here is a B. Now, this bar is a B because it penetrates into the pullback zone. But there's no trigger. There's no trigger until perhaps here, which is that price pulls back to the trigger zone. So something is not happening accurately in this right now. Now there's 48 ticks, so there is two double profit targets on this long, and that's what I said was happening right over here. But it didn't signal properly to me here, and it has not done so here. There's A, that's for sure. There's B. But there's no trigger. So that's a big issue that I have to get to the bottom of tonight and find out why the system did that. Typically, I think it's lags. But we will see. So back to back testing. Now, one thing about the IRT back testing engine, it is a bar by bar back test. This happens to be 1 minute. What does that mean? That means that if any of the computer will evaluate every one of these rules every 1 minute. Periodicity, whatever you have. In this case, 1 minute. If any of them, these are Boolean rules is all, if they evaluate to 1 or to positive, it'll put on a trade or do whatever's called for. You know, set a flag up here, whatever it is. Every bar, every high, low, close, but it doesn't notice or understand what happened first. So here, for example, you see that this bar, there's the B signal where the bar high or low within the pullback zone. Here, let me try to make that. Come on now. Go away, you stupid shit. Within the pullback zone up here. And then comes down to within the trigger zone. Well, but that's the incorrect sequence because it started down here and it closed up here. And by looking at the bar, you don't know what happened first. You don't know if it started here, traded up there, came back down here, and went back up there again. You can't know that. I can't know that or see that in time, and I don't think the system did. That's why that signal's there incorrectly. So I have to do something different than that, and what I'm thinking about is reducing the periodicity to say a tick to tick. Then I might have more accurate read test. And this thing is still just ripping up, up. So that would have been a fantastic trade that I stood here and narrated but was not confident in. So that's my fault. It is and it isn't. The signal didn't really happen. So I guess that's my excuse. But it did not happen. And once you have backtested something, if you introduce discretion, that means you're changing the rules. So you wiped out your backtesting. Anyway, backtest, set up, 500 days, instrument, session, reports, okay, backtest. Now I'm going to tell the computer to go back 500 days and evaluate these rules over every 1 minute bar. And there you have it. Took 9 seconds. It evaluated 223,536 1-minute candlesticks, 1-minute bars, 498 trading days. It took 875 trades, 444 long, 431 short. Maximum favorable excursion daily is 216 and adverse is 4250. There were 537 winning trades, average 3150, and there were 149 losing trades or stops, average 1270. There was 41 consecutive winners and 5 consecutive losers. The reason this doesn't say $75 or $30 is because I have this set to on T1. There's stop, T1, T2. On T1, 12 ticks. That's the trigger, trail trigger, and it trails to 0, which is entry. Break even, stop, plus entry. So it trails to entry. That's the reason that is not the 75 and 30. Another real interesting report always is this one, which is a detailed analysis of each of 822 or however many trades it was. Trade entry, exit result, and exact times and dates and values. So you can go back through and analyze each and every trade. Or if you're just in a hurry, you can look at the entire 400 or 800 trades, 498 days, and that's the equity curve. Now, I take this whole idea one step further, and that is to go over here. Each one of these trades, each one of these lines is a trade, is a back test, I'm sorry. And these are only the MES, the ES is above it. And here's the recent ones I've been doing, and I changed from initial balance to another one that I'm trying, that fence story, opening range. So, you know, and they capture all the numbers and they do the math. So here is a MES 12, 12, 48 to no scale, 498 days, 766 trades, 262, 68, 222, 30, 282 scratch, win rate, loss rate, expectancy, R value, risk to reward, profit factor, trades per day, MFE, MAE, gross profit, wherever it went, gross profit, commissions and net, and you can do Saltino and Sharpe ratio and everything else. Once you have this kind of a data behind you as a back test, I believe that I can, you know, I have actually vetted a trade, and I have, if somebody asks me why I took that trade or a vetted trade, there it is. There's the data backed up with the reports that you just saw. That's how I think you need to approach it. Now, looking over here, wouldn't that have been sweet? But one of the things that I'm discovering here with IRT, and I know very well from explanation of IRT's backtest engine that it is high-low close. You don't get intra-bar because you really can't. So I'm going to have to do a couple of things. I'm going to have to seriously explore another system that has, there's a way to do it actually like the real trading would produce, including, you know, position in the queue and everything else, and that's forward, basically a replay at speed. One of the best for that I've found out about so far, is I've been looking a lot lately, Sierra charts, which I used to use. They do have that functionality. They have both. You can do a bar back test or a replay back test, which now the thing I want to be sure about, which I have not identified yet, is if, you know, like I just went back 500 days. Well, if I want to have real accurate, basically tick data, I don't think you could get back that far with them with data. And so it has to be a meaningful back test. If the far back as you can go is a week, well, you know, ridiculous. So that's back testing as I understand it and how I approach it. And we're still, that trade would have been sweet. It was not signaled. I didn't take it, to be very clear. Now we'll do the market recap at the bottom of the hour, and then the market on close imbalance at 1450, which occurs every day at 1450. So let's see what these scallywags are up to over here. Here you go. Boom, boom, boom. Boom, right there, and then up. And it's real easy in hindsight or to look at that bar back test and say, well, this is what I did. It's also real important to be sure that you're not, you know, This is my trading journal, and I am for the purpose of improving my personal trading business. Why in the world would I want to fool myself? You know, I can't even imagine thinking that would be a good idea. So, there you go. These days have been pretty strange, I'll tell you that right now. And we don't know why this happened. It's not a very far excursion, but it certainly didn't approach this big V reversal, which is so obviously a place to enter in the rearview mirror, or here, this high. You know, it's not... I really don't know. I would love to figure out some sort of a system that would do that. And maybe it is simply trial and error, you know, just trade small, trade often. But I think about it in terms of reality. Like I want to try to catch that. I want to try to catch the swing high. For example, the opening swing high or swing low. Well, like I said, was that it? Was that it? That it? Here, was that it? Yeah, well, this turned out to be it. But, so you could have conceivably a stop. I don't think that's got... Yeah, it's not that. I don't see any way you can do that. Now, 35 minutes, okay? So this would be the end of the first 5-minute opening range right here. This would be the high of the opening range for the first 5 minutes. Yeah, I don't see anything. If anybody else has a way that they do this or a strategy that works around that, you know, please drop it in the chat. Let's talk about it. I'm all ears. This is my trading journal of what I'm doing now. The purpose is to improve, and this is certainly not my way or the highway. This is a way. Let's figure this out. I'm all ears. So, having said that, market recap. Well, there's the trading session so far, right there. There's Blue Boy, and there we are. It's pretty wide range because of these, excursions off into the bushes. But essentially, it's just a consolidation or a big batch of retail soup. News driven, I think. Here we are, a little easier to keep an eye on it. Yesterday's RTH session, today's RTH session. If you were a market profile guy, you would say that values building is overlapping and higher, because here's yesterday's value area high. It's actually not overlapping higher, because here's yesterday's value area, this blue, and here's today's. So are they trying to get value up, and why, We had a big pop on Monday based on just a, I don't know how to describe it, just a fantasy that one guy had, I guess. Or, you know, a lie that one guy told, or however you want to phrase it. It was done to give somebody a big pop on their trading, because that's been obviously, clearly raised as a question by every major news source and everybody else, that my goodness, look at how 1.5 billion ES contracts traded 11 minutes before the announcement. And I forget how many billion, one and change, I think, billion CL or oil, crude oil contracts sold at a similar time. Well, if that's not an indication of insider trading or somebody that, you know, imagine, well, you know, I don't have to go any further than that. And turns out it was completely crap. There had been no conversations with anybody. So I don't know what to say. Hold on a minute. Yeah, bummer. Missed the guys. And here we are back down again, eh? Coming back down at it. Well. All right, so, where the hell was I actually? Just the trade of the day. So, it's been balanced. I think it's a bunch of indecision around this, the war and the Epstein and the taxes and all of those things, the accountability and the credibility, weaponizing of the DOJ. I mean, it's just everywhere you look, there's something weird going on, in my opinion. And so it's hard for the market to pull the plug, which is what I think they're getting ready to do. I think they're getting ready for a massive dump. That's just me. Anyway, let's look at onward and upward here. Let's look at tomorrow. So I have described it earlier in the pre-market, but I will do so again for anybody that's new. I use two news sources, both of which I keep free. That's why there's all these beautiful ads flying around everywhere. You can pay, and of course I'm sure they would love it. And I suppose they go away. I keep them free because I want to have the resources that I use on the stream available to everyone that comes through the stream or that follows the stream. And there's nothing I can do about Bookmap or IRT. Those are paid for, and there's nothing I can do. So there's that. This is investing.com. It covers traditional, typical economic calendar events. Tomorrow is going to be the Michigan number. There's, non-farm payroll, GDP, consumer credit, housing starts. What is this? God, I have no idea what this noise is, but there you go. Well, anyway, I was going to point out the fact that they have a, and I just can't, I'm pretty sure investing.com is not a dangerous site, but I don't know. Maybe it's one of these ads that shows that. I don't know. Oh, and here we got Trump speaking again this afternoon now. That's new. What I was going to say was, if you notice that the the titles of these various events turn into a URL if you hover over them, and you can go, if you don't know what import price index month over month is, you can click that and go look, find out all about it. You can filter these for wherever you are, whatever time zone, whatever reports you're interested in. And now before this takes another crap, let's look over here. Tomorrow. Well, something's wrong. Something's wrong here. I could have sworn tomorrow had initial jobless here, but I could have sworn tomorrow was the Michigan number. Oh yes, it is. No, it's Friday. This Michigan. Today's Wednesday. Ooh, okay. I was thinking today was Thursday. Sorry about that. I'm wishing the week away. And let's look at the week. Yeah, here we go. And there are the Michigan numbers and some talking feds. So that'll pretty much wind up the week for us. There's not any big continuous jobless claims. This is a review of it, if I'm not mistaken. So fingers crossed we don't have any more red screens of death. And let's look at the financial juice. Now, they used to be, the reason I followed financial juice was, as I said earlier, they picked up these non-traditional economic numbers which represent possible risk to the auction, and pulled them into their schedule here. That's why I particularly started following or using it. On the right side, we have a squawk box idea. Oops. And this is where the market on close orders will be displayed. But I just noticed something now that you see here, and if we go back to investing.com and we go to today, 1620, the president speaks, 3-star event. They didn't used to pull these in intraday if it were scheduled in advance. Fine. So I don't know. Maybe somebody complained and they started doing that. I don't know. But that's interesting because this does not reflect in financial juice. Huh. Well, there you go. So basically, we're in a real highly reactive risk environment. Remember that your prime mission as a trader is to protect and preserve your account. In reality, in this environment, we are risk managers. You want to know any potential risk that might threaten your account. And I don't mean anything political, but if you're in a long and the market suddenly dumps 200 handles and you don't have stops on, guess what? That's a dangerous risk. So whenever I see any of these kinds of potential risks, having seen enough reactions to them in the market in these past few months, I make sure I'm a long way away from in a trade. That's the best I can say. 5 minutes till the market on close. I don't know why that threw that goofy error thing that it did, but it did. It kind of wraps up the daily recap, I believe, and hopefully everything will continue on. Okay. Ground news. I don't see anything ground newsy that's different. So he's showing classified maps. 22. Okay, great. That was 4 years ago. So what? Really. I would say there's enough excursions away from normally anticipated manner and protocol. I think there's enough, current that I'm not interested in looking back. Now the stream, I stream live every trading day from 8 o'clock in the morning until now, until 1500, which is the cash close. 7 hours. Start with the first half hour pre-market setup. Identify the statistics for the day. Take a look at the pre-market and what the anticipate trade would be for the day. Absolutely look at the news and the upcoming reports. And then we take the day on a day at a time. Let's try to have no anticipation, no preconceived ideas, just watch the market. The old saying, trade what you see, right? Not what you think. So that signal that wasn't really a signal has been pretty much redone over here. And when I trade live here on my funded AMP Futures account. And it's completely transparent, including the graphing that Bookmap does so well on the trades and the entry and the exits and the break-even line and all that stuff and the profit targets. And I also use this, which gives a complete breakdown of all the metrics of the trades, once they're taken, of course. So There we go. Minute and a half for the market on close and balance, and then we're going to take it into the close. I hope that y'all are this is a really dangerous environment for your account. If you're trading a prop account or sim or whatever, you can have as much fun as you want, I guess. But bear in mind that fun can start sowing the seeds for bad habits, right? So you don't want to do that, and you want to be sure that you don't let Monkey Boy get out. Monkey Boy or your monkey mind is the analogy I use. You know, some people use Jekyll and Hyde or whatever else. We have evolved as a species with a lot of stuff that kept us alive, and, you know, risk aversion and wanting to be right and all that stuff. None of those things serve us well in trading. And I don't believe you're ever going to get rid of any of that wiring. There's the market on close orders, and exactly nothing happened over here. Pretty crazy. Yesterday was the lightest market on close I've ever seen. That I remember. So here we are. 240 million buy-side S&Ps, 931 million buy-side NASDAQ, 168 buy-side the Dow, and 571 million buy-side Mag 7. Yesterday we had no, that's not it. Yesterday was really low. This was one that was quite shocking to me. That's 7,654,000,000 contracts. 7 billion contracts to sell. And remember, it's a zero-sum game. 2,400,000,000 sell side. Dow. I was shocked. I have never seen numbers that large. And you stop and think about it, you know. We're all butthurt thinking they're chasing our two-lot stop. Jesus. Nice. Well, tomorrow is no school run. That's a good thing. Tomorrow is Thursday. Guess that's a good thing. Hopefully we can have a, positive communication trading kind of day tomorrow. And, maybe they'll take all the politicians somewhere and lock them in a box. I'd like to have a day where there wasn't some random goofiness. Or that if we had random goofiness, like, for example, wouldn't it have been great if Monday was not just a complete staged reality TV bullshit experience? Wouldn't it have been great if that was really the truth? The whole country'd be rallying. It was just a damn lie. Complete lie to front run some buddies that were making big trades. Working on insider trading, which is, pretty much against the law. Really incredible. So tired of this. I'm tired of what they're doing to our market, to the point of thinking about maybe I should start trading, the DAX or something that's not so directly dependent on this bunch of yahoos we got back there. Yeah, damn, crazy. So here we are. You know, remember the most critical tool you've got in your trading office is you sitting on your side of the monitor there. And you better recognize and believe that's the truth, because it is. And that's where you should start. You should start working on you. Make sure that you're well rested, hydrated, fit, healthy. If you're on emotional tilt when you come in the morning, throw the mouse in the garbage. You know, all of the money and time you spend on monitors and back testing and indicators this and, you know, YouTube, this guy talks about that. It's all crap. Your eyes take in all of the data. Your mind processes the trading data, and you use that to make financial decisions for your family. Think about it. None of that, you know, you don't learn to play the piano by watching YouTube videos. You learn to play Moonlight Sonata because you practice the piano with focus. That's important to get your, you know, take that on board. And eating my own dog food. I'll go out for a walk here in a little bit and rest my eyes and focus down the street and try to do some squats and stuff and see if I can't keep myself healthy. We're gonna wrap this bad boy up in 4.5 minutes. Please know how much I appreciate you coming by the stream. Like, subscribe. That's really great. Participate in the chat. Really great. Every trading day from 8 o'clock in the morning, the pre-market is pretty in-depth and set up all the software and the bracket orders and all that stuff. Anticipate what may come for the day. So, about all I can say. I'm going to give some serious thought to this, what I'm going to do with the backtest thing. My first thought is to drop down the periodicity to say a tick or 30 seconds or something. – 15 seconds maybe. To get away from this kind of a single bar 1 minute thing. And it's pretty simple. All I have to do is change the periodicity. I mean, it's not like I have to rewrite the Bible, you know, or something like that. So I can do some experimenting. And I had quite an eye-opening checking out Sierra charts, which like I said before, I used to use. And Sierra charts pretty funny. I don't remember the last time I used Sierra charts, but it was probably around 2000, maybe 15 or 16 or something like that. And yesterday I ended up clicking a link which took me to Sierra charts because it was about from their handbook, I think, about backtesting. There's my name, there's my sign in. If I want to go active, I just need to pay $50, whatever the hell it is, and away we go. I was pretty surprised. You know, there was Boomer. I've been using that for years. I started the Boomer thing. The first place I think I used that to log on to something was Top Step back in like 14 or 13 or something, somewhere back there, and just kept it going for continuity's sake on, you know, my part. Well, a minute and a half and this bad boy is going to go pop goes the weasel. Champagne corks will pop and the crowd will clap, and there we are. Antonio and Anton are sound asleep or gone or whatever else it is. And I appreciate you coming by, everyone. I really do appreciate it. And the likes and subs are great. I'm not monetized in any way by YouTube. In fact, I stream to YouTube. I didn't probably mention this, but the reason I stream to YouTube is so that I can monitor the stream from any device. These are standing desks in my office, no chair. And so I'm standing here for around at least 9 hours a day, because I start at 6 in the morning, and the stream is 7 hours, and I'm usually well past that. Last night was, I shut things down at like 2200 or something. Makes for a long day. So it's nice to be able to review the stream on the phone or when I'm walking or whatever else it is. And also, it's another layer of transparency and accountability. And having said all of that, 15 seconds, oh boy, oh boy. So yeah, another trading day, and we made it out unscathed. Huh? The problem is no trades is as bad as, well, it's not as bad as losing money, but it's almost as bad because you're not making any money. So when it's a business, that's a bad thing. Take my advice, get out, get some fresh air, soft focus your eyes. Natural light is really good for your eyes, especially after all the screen time that we put in. Do some exercise, stay fit, stay healthy, try to eat right, don't drink too much. This can be a long-term job that you can do well into your sunset years, no problem. So, or career, I should say, not job. So having said that, I'm going to do what I need to do every day to shut the stream down and tidy it up and get ready for tomorrow. And I'm going to definitely look into that backtesting stuff right now. Have a good one. Thanks for coming by. I really do appreciate it.